Gentlemen. Good morning, ladies and gentlemen, here in the auditorium at the Building Bridges event, and also those who are joining us online. It's a pleasure to welcome you all here today. My name is Jan Kellett, and I am working in the UN Development Programme, and I lead UNDP's global practice on insurance and risk financing, which I think we would all accept is one of the key areas when it comes to sustaining development. Very critical in the world of uncertainty that we currently have. And it's a great pleasure to welcome you all here today. Today's event is going to look particularly at how we can use some of our tools, some of our expertise to ensure, to protect, and to build upon our very precious natural capital. We have some excellent speakers here today, and we're going to hear some words also from two of our ambassadors here in Geneva as well, before we go into the panel. But perhaps just to set the scene, I just wanted to share a few points, and I'm sure this is very familiar to many of you, when it comes to particularly reefs and how they are important for many communities and countries around the world. Now, the data shows that 1 billion people in 100 countries depend upon reefs for their lives and livelihoods, for economic growth, and are heavily dependent on them. That is an incredible figure right there, immediately showing how important this area is. With a value each and every year of $2.7 trillion from these reefs. We know that 10% of the entire world's population lives within 100 kilometers of a reef. And we know that healthy reefs reduce 97% of wave energy. So here we have, if you like, a coming together of many different things: tourism, energy, transport, trade, livelihoods, food, and actual physical protection, all dependent on reefs. But of course, these reefs are under significant threat. And I think we all have been following the data and the science in terms of the warming oceans, in terms of pollution, in terms of storm damage, and how that is affecting the actual reefs that we have. I did a little bit of investigation myself last night just to see what the latest data is. And essentially I found out that in the last 10 years, well, basically 2009 to 2018, 14% of the entire world's reef has been lost. That's just in a decade. So if that's not a call to action in itself in terms of how to better finance and to protect or use the financing tools that we have to actually protect our reefs, given what I just said in terms of how important they are, I do not know exactly what would be. So this is what we're here to talk about today, is essentially what can we do differently? And particularly, how can we use the expertise we have and the financial tools we have in order to better protect reefs that protect us? So it's a great pleasure on behalf of UNDP and the Ocean Risk and Resilience Action Alliance to welcome you all here. We're going to have a presentation of a report which looks at some innovative ways to use insurance and financing and investment to protect reefs in a moment from my colleague Faraz, and then we will have a panel with some experts who will discuss some of those findings and also discuss from their own position, industry, public sector, etc. But before we do that, what I would like to do is welcome Ambassador Mai from Vietnam to give us a few words to start us off. Ambassador, if you would like.
Good morning. Mr. Jan Kellett, head of the UNDP Insurance and Risk Finance Facility, Excellencies, distinguished panelists and participants. I would like to express my sincere thanks to UNDP office in Geneva for giving me the precious opportunity to deliver the opening remarks at this important event, sharing the perspective of Vietnam. First, we acknowledge the need for integrated approach and innovative solution to enhance finance for SDGs, including climate-related risk reduction, coral reef protection. Financial solutions, including finance for coral reef protection, are relatively new. The UNDP report on ensuring nature for reduced risk transfer solution for coral reefs, and this panel discussion today provide a timely, fresh, and insightful views and studies in developing a range of risk transfer options, including insurance to support the restoration and conservation of coral reefs and preserve the biodiversity of such ecosystem, contributing to achieving SDG 14, conservation and sustainable use of ocean and seas and the marine resources for sustainable development. As Jan Khaled already mentioned, the importance of coral reefs and the importance of protection of coral reefs to protect us. So now, in such context, the new initiative by UNDP Insurance and Risk Finance Facility, IRFF, with financial support by the Ocean Risk and Resilience Action Alliance, ORRAA, is of great significance and meaning. Second, I would like to share with you the perspective of Vietnam regarding the status of coral reefs and our relevant actions, collaboration with UNDP in this regard. As you know, Vietnam has more than 98 million population, of which about 70% living in the rural areas. We have about 3,200 kilometers coastal line with many beautiful beaches attracting tourists around the world and a high value and diverse coral reef ecosystem spreading across the country's territorial waters. Scientific surveys and research of Vietnam with collaboration of international researchers show that coral reefs are one of Vietnam's unique marine ecosystems with extremely high biological diversity and amazing scenery. The coral reefs are scattered across the country's maritime areas, and there are about 400 types of coral reefs in Vietnam, and of which about 3,000 species of marine creatures have been found, including a diverse array of coral fish, which can be compared to the most diverse ecosystem in the world. These reefs not only support the small-scale fishery sector by providing employment and food, but also provide protection to communities from coastal flooding by reducing the destructive wave energy of the ocean. However, Vietnam is among the countries most vulnerable to the negative impacts of climate change to natural ecosystem and the life of the people. Currently, there are 36 species belonging to the coral reef ecosystem listed as endangered and red list of Vietnam. For tackling the impact of coral reef degradation to the livelihood of coastal population, and moreover, for achieving SDG 14, we have been implementing the National Plan for SDGs adopted by the government in 2017 and the Strategy for Sustainable Development of Vietnam's Marine Economies to 2030 with a vision to 2045, issued by our party in 2018. Accordingly, Vietnam has implemented several measures for protection of coral reefs, establishing many marine protected areas, MPAs, along the coastal areas of Vietnam. Also, at the core of 26 Summit last year, Vietnam committed to obtain net zero emission by 2050. Our socio-economic development plan for 2021-2025 put a priority on climate change adaptation, environment protection, circular economy transformation, green finance for sustainable development. Our country set the objective to develop a sustainable, carbon-positive blue economy that strengthen the management and protection of coral reefs and associated ecosystems in perpetuity. We are aimed at coral reef ecosystem direct conservation activities, including marine protected area, coral reef restoration, and promoting activities that limit surrounding threats to coral reef ecosystem, such as sustainable fishery, sustainable mariculture, ecotourism, plastic waste management, and others. Achieving these objectives will require actions to reduce the local drivers of coral reef degradation and promote resilience through conservation management efforts, and this will also help in reducing poverty, diversifying livelihood opportunities, and protecting the local coastal communities. For this, there is a need for the inclusion of innovative business models and financial instruments to catalyze multi-stakeholders engagement and investment in coral reef conservation, resilient initiative. Third point I would like to raise is that the lack of financial resources is one of the most critical barriers to implementation of SDGs, including the effective management and enforcement of the marine protected areas and the protection of coral reefs in many developing countries, including my own country, Vietnam. We are therefore thankful that Vietnam was selected by UNDP as one of the first countries, together with Indonesia and the Philippines from Southeast Asia, to participate in UNDP's Insurance and Risk Finance Facility, IRFF initiative, which aims to develop coral reef protection through insurance. UNDP in Vietnam has been working closely with our relevant agencies, including the Insurance Supervisory Authority under the Ministry of Finance, the Vietnam Disaster Management Authority under the Ministry of Agriculture and Rural Development, and several cities and provinces in Vietnam in developing a specific climate risk-related insurance product for cities focusing on public access, and also developing mechanism for financing the risk reduction, response, recovery, and reconstruction in the aftermath of large-scale disasters in Vietnam. So Vietnam supports and is willing to join the IRFF initiative. Currently, the Ministry of Finance of Vietnam has established an ODA project management board as the focal point to coordinate with international agencies and organizations for implementing cooperation programs, including the IRFF initiative, to seek funding for protection of coral reefs. Excellencies, distinguished panelists and participants, I believe that the panel discussion today will help to enhance understanding how insurance and risk transfer solution can be developed for protecting coral reefs, and also shed light on what solution can be offered to countries like Vietnam in terms of developing finance solution for coral reef risk reduction and enabling environment to connect efficient finance with SDG 14. I do believe that following the launching of the report, UNDP will help bring multi-sector partners together and catalyze capital and investment to realize this initiative with concrete projects through innovative financial solutions that protect biodiversity and dependent communities for a more sustainable and healthy future for all. I thank you and wishing the panel discussion a successful one. Thank you.
Thank you very much, Ambassador, for those sharing those wise words, and particularly picking up on your point about how, in a sense, important the reefs are to Vietnam and other countries like your own, how vulnerable they are, how important they are in terms of tourism and trade and economic growth, and how the international community can work with you to, if you like, protect them. And that's noted your own work in this space. And actually, there's a very useful segue here, because the work that you mentioned there, which is looking at particularly protecting cities along the coast of Vietnam, that is actually financed by the German government. So now we have a useful segue here, because now I'm going to ask the Ambassador Jugel from Germany to actually come up here and make some remarks in this area. Ambassador.
Yeah, thank you very much, Excellency, distinguished participants and panelists, ladies and gentlemen. Thank you very much for this invitation, standing before you against this backdrop and looking at this wonderful photo. Well, this is not a typical German coastline, but actually it really shows that in the spirit of building bridges, it is right so, because we are in one boat, so to say, when it comes to climate change. So I'm really happy to be here and to address some quick remarks to you. Talking of climate change, well, you all know in recent weeks we have witnessed the impact of climate change and natural catastrophes all over the world. In Pakistan, where 30 million people have been affected by previously unseen floods. In Ethiopia, Somalia, and Kenya, where droughts have destroyed countless lives and livelihoods. Not to mention the wildfires across Europe, so everyone is affected and everyone is noticing climate change and the consequences. So urgent action is needed now. This is why, in close cooperation with the G20 group of countries, we put losses and damages center stage at the German G7 presidency. And at the G7 summit in Elmau, our leaders tasked us with working towards a global shield against climate risks. The Global Shield Against Climate Risk builds upon the achievements of the Insure Resilience Global Partnership, whose partners have in 2021 financially protected 150 million people in more than 100 countries against climate risks. The Global Shield Against Climate Risk will expand financial protection and support faster and reliable disaster response through risk financing and insurance to finally move from reactive crisis response to anticipatory risk management. To achieve the ambitious goals of the Global Shield, strong partnerships and innovative solutions are key. The tripartite agreement between Germany, UNDP, and the Insurance Development Forum is an important example for such a strong partnership. Today's event on ensuring nature-based solution is an inspiring illustration of necessary innovative solutions. Nature-based solutions like coral reefs can play a vital and diverse role for managing climate and disaster risk and securing livelihoods. They can effectively serve as a risk reduction measures protecting coastlines, communities, and businesses from climate-related disasters. As integrated ecosystems, reefs, mangrove forests, and seagrass beds also mitigate climate change by absorbing carbon dioxide. And mitigation is and remains still the best way to prevent losses and damages. Finally, coral reefs offer economic benefits and are highly valuable for securing and safeguarding biodiversity. Let us be aware that 1 billion people in over 100 countries rely on coral reefs for their lives and livelihoods. So, how can we make sure that this immensely important environmental asset is itself protected from disasters? Can we incentivize investment and political action for coral reefs to protect and maintain them? The report on ensuring nature to reduce risk informs us about the pivotal role insurance can play to address these questions. Through the Insure Resilience Global Partnership, Germany has already promoted innovative insurance solutions that pay to restore coral reefs after disaster damages. For example, the implementation of an insurance program for the Mesoamerican reef, which indirectly benefits almost 500,000 people. So Germany gives comprehensive risk management in the context of climate change top priority. Therefore, we highly welcome this much-needed report as an important impulse on further thinking on how risk finance and insurance can contribute to a more resilient world, a world we all live in. Thank you very much.
Thank you, Ambassador, for those words. And just a note here, I think it's, I think there's no amount of respect I think we should give to Germany here with regard to your leadership in the insurance and risk financing space. Within the Insure Resilience Global Partnership, your work there, and of course the work within the G7, which is now leading to the Global Shield, which will be launched in Egypt at COP. And we will see how that will increase the volume of resources which go towards countries. I think one of those pieces which still has to be connected is what's the direct connection between that and how investments in protecting natural capital. Still work to do, I think, technically in that space, but definitely a positive initiative. So thank you very much for your words in this regard. So colleagues, what I'd like to do now is invite my colleague and the lead author of the report that we're talking about today, Faraz, who is joining us from as far away as possible we could basically put him, Perth in Australia. But there he is, has its own issues with reefs, I believe. So Faraz, if you could spend some minutes to outline some of the core messages and recommendations from the report, please.
Sure. Thank you, Jan, and Your Excellencies, ambassadors, the esteemed panelists, and all the participants. Hello, and a very good morning. My name is Faraz Amjad, and I'm part of the UNDP's Insurance and Risk Finance Facility. As Jan mentioned, I'm right now not in Perth, I'm in Albany in Western Australia, and I will be presenting you the findings and the key messages of this report today. Before I start and present you one of the latest reports, which is Ensuring Nature to Reduce Risk, the Risk Transfer Solutions for Coral Reefs, I would like to acknowledge the support that we have received from the Ocean Risk and Resilience Action Alliance and also the Government of Canada, without which this report would not have been possible. Can we go to the next slide, please? Okay, thank you. So before I start, I would like to quickly present you some key facts about the coral reefs, and you would not be surprised that the coral reefs support about 25% of all marine species, and the ocean economy provides these employment and ecosystem services, which is worth almost $6 trillion a year. And these coral reefs are also supporting the oceanic food resources for over 1 billion people around the world. Now, talking about the coral reefs in the Coral Triangle and the Caribbean region alone, so to combine them together, they have the potential to boost the economic returns by almost $70 billion a year. We have also seen that how much coral reefs support the organisms that are critical for modern day medical research. Now, looking at another perspective, which is the coastal protection provided by these coral reefs, as we see that nearly 600 million people, or almost 10% of world's population living within 100 kilometers of the coastline, is actually getting the coastal protection because of these coral reefs. And you would not be surprised that 75% of these people are actually living in the poorest developing countries, the countries where there is a limited supply of resources to invest and protect these coral reefs. Next slide, please. Thank you. Now, this report has actually started out by mapping the challenges and the risk faced by the coral reefs. So we have done the extrapolation in the dimensions of hazard, exposure, and the vulnerability of these coral reefs to identify the impact of those challenges and risk. We have assessed the risk due to the factors like cyclones, the earthquakes and tsunamis, tourism, and the man-made pollution. We have also assessed the impact of coral bleaching and the ocean warming. And one of the important thread which has been there in the recent times is the impact of COVID-19 and the pandemic on the coral reefs. The report actually presents all these risks and their impact. Next slide, please. Thank you. The report has also provided a methodology for the quantification of benefits provided by coral reefs, and we have done it in 3 dimensions, starting off with tourism sector. And we have tried to assess and provide a methodology that what is the effect on the tourism revenue if there is a change in the condition of a coral reef. We have also assessed the impact on the fisheries sector, which is quite important for many countries where coral reefs support the fisheries and the fishing communities, that what is the effect on the nearshore fisheries and the associated economic returns. And finally, the report has also provided some methodology and estimates of the effect of the coral reef protection and how they actually support the coastal communities and the built-up capital. Next slide, please. Now, before we decide that what kind of insurance solutions and the risk transfer solutions are suitable for coral reefs, we need to first understand that what is the business case here. So the report has provided 5 key steps to decide and developing on the business case. The first step is to identify the opportunity sites where reefs provide economic returns and the protective services. The second step is to actually estimate the economic value of those benefits, because unless we know what is the economic value, it is very hard to decide whether we want to use the insurance and risk transfer solutions. So you have to estimate the economic value that is provided by coral reefs, for example, in terms of coastal protection, the tourism sector, or the fisheries sector. The third step is where you estimate the economic loss value of losing those benefits that are provided by the coral reef. So once you know that what is the value that is at risk, so you go to step 4, which is about estimating the socio-economic conditions and the financial exposure and the vulnerability of those benefits and what are the chances of losing those benefits. And that's when you can decide that does it make sense to use the insurance and risk transfer solutions that can actually pay for repairing the damage faced by those coral reefs. And finally, you come to this step where you assess the risk financing mechanism where insurance can work, or if insurance is not the best option, then what are the alternative risk transfer solutions? Next slide, please. Now, without jumping straight to insurance, we have actually provided a step-up objective approach where we start off by recommending the risk reduction, that how investments can be made. So the report has suggested ways to manage the risk exposure, and this will help in bringing down the maximum probable losses and the insurance cost. Now, depending on the residual risk, then you go to the next step where you decide that what kind of risk transfer can be achieved through insurance by developing risk models and suitable insurance products. And after that, if there is a still residual risk that cannot be absorbed by the insurance solutions, that's when you need the non-insurance risk transfer, that what are the alternative approaches where insurance is not feasible or unviable. Next slide, please. The report has also assessed the common gaps within the country frameworks. Now, we have limited time here, so we won't be able to go through all those gaps that we have identified, but some of the key gaps, the policy issues and the institutional gaps that I would like to talk about. Starting off with the most important one, which is something where we see there is an absence of the authority of local governments to protect coral reefs. Now, we see that in most of the countries, the coral reefs have been declared as natural assets and not the public assets. Now, had it been the other way around, where the public assets are the ones for which the local governments and authorities have the mandate to use insurance and risk financing protection, but not for the natural assets like coral reefs. Another gap area is where we see there is limited national and local policies that talk about the impact of disasters on coral reefs. Now, we see in most of the countries, the national disaster management frameworks talk about the impact of disasters on the public assets and infrastructure, but none of these frameworks or policies are vocal about the impact of disasters on coral reef and what is needed to be done to mitigate those disasters. Another important area is that there is a lack of guidance on securing financing and insurance solutions, because most of the countries that we have assessed, they don't have the policies around using insurance to protect the coral reef. So these are some of the main policy gaps and policy issues and institutional gaps on which we need to work. Next slide, please. The report has provided a detailed conceptual design of a reef disaster risk fund, where we have used a multi-layered approach. Now, you can see it here on the screen. That's the first layer, which is the layer 0, is for the regular reef maintenance, where you can actually invest and protect the coral reef, and by investing in the disaster risk reduction. The next layer on the top of it is the layer for those kind of losses which are low intensity, so that this layer will work in a self-paying mechanism where those losses are very frequent, so high frequency losses that are uninsured or uninsurable. So for that, you need to have some reserve mechanism where the local authorities are responsible to manage those kind of losses. On the top of it, we see layer 2, which is a drawdown debt layer, which is for those kind of emergencies where the contingent credit can be used to carry out the reef restoration against the uninsured losses that are beyond the self-retention capacity of the local authorities. And then comes the insurance layer, where insurance claim payout can be used for reef restoration against the insured losses. Now, this operates in an excess of loss arrangement, where there are losses that are beyond insurance limit can be passed on to the final layer, which is the layer for alternative risk transfer, by using the alternative risk transfer instruments and the proceeds from those instruments that can be used for reef restoration, depending on the nature of the losses, if they are high severity losses and they are beyond the insurance limit. So this is a conceptual design that we have recommended in the report, but then it all depends on the country needs, and it can certainly be customized. Next slide, please. The report has also talked about the impact assessment framework. Now, we have limited time here, so I can't go in the detail of this framework. You can have a look at it in the report, but just to quickly give you an idea that we can have the assessment of the impact of reef insurance by assessing that how much reef area has been protected with the help of insurance, what are the number of direct beneficiaries disaggregated by gender, and what change has been there in the business turnover before and after a disaster if the insurance has been used. Next slide, please. Now, this is my second last slide here, just to show you quickly what is the outlook and recommendations. So I have picked up 5 key recommendations from the report, starting off with the policy advocacy. So the report suggests the ways how to engage with the stakeholders to create the policy and the legal provisions for reef insurance and alternative risk transfer solutions, as well as investments. The report also provides the idea about the use of systematic data models that can be used to develop suitable data collection systems that will help in the design of risk solutions, including insurance. The third recommendation area is related to supporting the demand side through innovation. This is where we suggest that the small-scale fishing communities or the micro and small medium enterprises and the communities, the coastal communities, the network organizations or the associations, how they can be reached, because they are the people who are closest to these coral reefs, and they can play a role as intermediaries for not only for as a channel for insurance distribution, but also working on the activities related to reef restoration. The report also talks about the gender balanced participation, that how much important it is to have the women participation in the climate resilience initiatives. And finally, it talks about bringing inclusivity through the roles that can be played by the national governments, who have the more role, I would say, for attracting international financing and the implementation of necessary laws, whereas the local governments have the role to invest and work in the area of risk reduction and creating the opportunities for the private investment. Next slide, please. Okay, this is my final slide. So as Jan also mentioned at the start of this session, that what is the call for action here and what is the way forward? So the report talks about 5 key areas in terms of the way forward. So first one is by looking at the need for protecting the scale of investments. There is a need to bundle insurance with the nature financing for de-risking and providing funds for the post-disaster restoration work. The report also talks about developing parametric insurance solutions so that in the extreme weather events where especially the data is limited, so these kind of solutions are more effective. We can certainly use the hybrid solutions because they actually bring the efficiency of parametric insurance as well as the certainty of indemnity-based insurance. The report also talks about the creation of integrated risk index, that how development of this kind of index will give us an idea on the changing nature of the risk faced by the coral reefs, and that will also help you decide that what kind of insurance solution is suitable for these various categories of risk, and also depending on the geographic location where these reefs are situated. The report also talks about the risk awareness and the reporting framework and what is the need for the standardization of the reporting and the assessment framework that can be used for the restoration programs funded by insurance. And finally, it talks about the need for stronger legislative policies and the conducive environment. And there we have also suggested that there is a need to have the country-specific mapping of stakeholders who have the authority and the mandate for reef restoration by using insurance. So this was all about the report. You can certainly download the report by visiting the website of UNDP's Insurance and Risk Finance Facility. Thank you so much for your attention. And I would like to pass it on back to Jan. Jan, over to you.
Thank you, Faraz, for that presentation. We're going to go to the panel now. I mean, just want to pick out a few things which I thought. I mean, there's a lot of information there and a lot of detail. But I mean, some of the particularly striking things I'm just thinking of here is, I think first of all, is the criticality of government and the legislative and regulatory and supervisory space, both in terms of the actual management of reefs and also the way in which financing mechanisms can mix and match with that management of those reefs, given that these are public assets. And what does that actually look like? And that actually runs throughout the report. That's one of the sort of core aspects. That's why that point on advocacy is really, really key, I would say. And then, of course, what you do with the advocacy afterwards. Maybe as a second point as well, that the report, although it focuses on how we can use insurance and innovative financing solutions towards to strip away risk and build resilience of reefs. There's also a call to say that we need actually more risk reduction as well. So it's not just the insurance side, or you could say how insurance itself can be an actual catalyst for having more risk reduction. And then you move into, once you've reduced, then you move into the risk transfer space. So that's my second point. And then just thirdly, I'd probably say a significant underinvestment in this space in general, given the importance of reefs and just the amount of money that is going to be required to actually protect them. And maybe we'll hear some of that from some of our panelists. So thank you very much to you, Faraz. And what I'd like to do now is just call up my 3 panelists, if you could come and seat here. Actually, we have 4 panelists because we have our colleague also calling in from Indonesia. So I believe the microphone works when you speak. That is correct. I am being told yes. So, ladies and gentlemen, moving on to the panel part of our discussion today. First of all, I would like to introduce our four expert panelists. And I will first of all introduce Henry Siri, who is the Secretary of the Directorate General of Marine Spatial Management, Ministry of Marine Affairs and Fisheries from Indonesia. Welcome, Henry.
Welcome, thank you.
Then I have to my left, I have Tobias Meyer. Tobias, you are filling in for Veronica Scotti today. So perhaps you can, I'm not quite sure of your titles, but perhaps you could just tell us, and I apologize for that.
No problem at all. It's working? Okay.
Yes.
Welcome, everyone, and thank you for giving me the chance to speak here on behalf of Veronica, who fell ill and asked me to step in. I work for Swiss Re, which is a global reinsurance company headquartered in Zurich, and work in a team that is dedicated to the public sector as a new sort of client base. And so we were involved in the first insurance project for such a reef in 2017 in Mexico that I was alluded to.
Very good. Thank you, Tobias. And we have some questions that will help you unpack that a little bit more later. And then further on, I have my colleague from UNDP, Tenke Sultani, who is the Senior Development Finance Advisor, and particularly focusing on debt and bonds and other things. And we'll hear some words from you on that side of things later. And then last but not least, just moving paper so I can get the right title, have my friend Chip Cunliffe, who is the Program Director of the Ocean Risk and Resilience Action Alliance, who are bringing this event to us today with UNDP. So welcome to you all, and thank you very much for being with us today. So if I could start, Hendra, with you, please, as a representative of the Ministry of Marine Affairs and Fisheries in Indonesia, and particularly ask you a few questions about the government's role there and how you see insurance. So maybe just a few sort of pointed questions to ask you here. How do you, how does the ministry actually plan in general the sort of post-disaster management or the management of reefs, given the pressures that we've talked about from, pollution, from storms, storm surges, from heating waters? What does that actually look like? How do you see insurance playing a role in that? And do you see, are there sort of legal regulatory challenges that the government itself needs to address in order to be able to address those areas? So Hendra, if you could make some comments in that area, please.
Right. Thank you, John. There's a lot of questions. But I guess I would start that we can say that Indonesia in the ring of fire. So we have plenty of natural disaster, including the disaster to the coastal and marine resources. And yes, we are part of what we call this, about 40% of our coral reef is part of the coral reef in the world. And we are the center of all this coral triangle. Paras already mentioned in his presentation. So yes, it's a huge potential and the resources. We are facing the challenge of the calamity and also disaster. And of course, we're thinking that insurance can be one of the solution, as already Paras mentioned. Also, we can be also a non-insurance mechanism, but insurance can be one of the solution for to protect the assets. Talking about the challenges, we have some kind of what we call this. Regulation related to the insurance arrangement, but this is still limited in terms of a natural capital insurability. So this is not specific yet as how we give the insurance for the coral reef. I can list it here. First, there is we have presidential regulations number 75 2021. This is talking about the disaster management fund, which is can be a source of, the source of emergency fund from the various, such as national budget, local government budget, donor, also insurance payment. So I already mentioned in insurance payment here. So it also mentioned about the use of combined fund from the insurance premium from ministries, communities, local government, which is have the right to become insurance policy holders, and also risk transfer mechanism through insurance. The second regulation is Presidential Regulation number 18, 2020. This is concerning national medium term. It's also talking about how we give restoration. So we do it restoration for the damaged ecosystem, especially for the coastal and marine environment. And the Minister of Finance already enacted the regulations number 120 of 2020. This is concerning procedures for management of environmental funds. This is a kind like of, we call this a national entity that can be used for trust fund and also conservation assistance. So I can say that there is some mechanism there. And also the challenges here, we don't have any, as I listened from Paras and also discussed with the colleague from the NDP Indonesia, we don't have any like parametric insurance like in Mexico that can be used as a like cyclone, and the parameter can be used easily. So the challenge here, how we can use the parameter for easy, to pay the complaint, and also pay the damage for the ecosystem. So I hope I respond your question, but I'm happy to answer if you ask more. Thank you, Jan.
Thank you, Hendra. Thank you very much. We will come back to you later a little bit with a few follow-ups as well. But I'm just picking out a few things. You mentioned the importance of regulations and the regulations to actually do the business of setting the, if you like, the ground rules or the conditions for having insurance as a solution. You mentioned about the disaster fund that has been set up, and also the regulations on restoration and the links between the two of them. But I do note as well as that, the last comment you made, which was that as yet there's no mechanism. So we don't have a mechanism such as was mentioned by the ambassador in Mexico operating in Indonesia. I mean, this is actually a very useful segue, actually, to bring in Tobias from Swiss Re. And actually, UNDP and Swiss Re and the ministry are actually working together in Indonesia exactly to essentially to develop an initiative in this space. And maybe you can touch upon that, Tobias. But I have also a few questions for you as well as one of the major reinsurers around the world. So I think, first of all, how do you see insurance? What, if you like, where do you see insurance as offering a solution here, and what are the limits to that? What can insurance do? What maybe insurance can't do or shouldn't do? The second question: do you see anything particularly innovative in the reinsurance space, which perhaps hasn't been used, hasn't been uncovered yet? And what is it going to take to scale up the kinds of initiatives that we actually need to put together? So a range of questions around there, Tobias, if you could.
Thank you so much. I thought what I could contribute, I'm quite impressed by all this interest in risk transfer, insuring reefs, that UNDP will publish a whole report on this, and obviously sort of establish what you might call the theoretical framework around this, all the different components that need to fall into place. So maybe the best contribution that I can make to this discussion is to kind of tell you a little bit about this one case that really, where this has been implemented, and I should say renewed on an annual basis, and kind of work back from there about what this is and how it works, and by extension what it takes. In the case of the Mesoamerican reef that is off the coast of the Mexican state of Quintana Roo, and which you have a big hotel industry there that benefits from this reef. It absorbs wave energy, as the ambassador alluded to earlier. It protects the beaches, makes this an attractive place to visit. There was a recognition that storms that come in from the east to Mexico, because Mexico faces hurricanes from both sides, from the east, have the potential to damage this reef, and then that results in the beaches being torn up, seaweed lands there, reservations go down, and so forth. And so the hotel industry association, I think, local hotel association, kind of got together and started thinking about this problem or recognizing this problem. And the local government, state government of Quintana Roo, has a department for, I'll be honest, I don't recall, but who took responsibility for this. And that is kind of those are the two driving local actors, if you will, that got involved in this. And then out of this came this idea, well, there is something you can do. You can't prevent hurricanes from coming in, but you can restore the reef after it has been damaged. And what that means is that in that place, in Mexico, you have these brigades who dive down, identify broken off chunks, and there's a way that you can sort of glue them back on. And these are my own words, but apparently that works. And so the insured amount in this instance does not reflect the value of the reef. No one knows really the value of the reef. Presumably you can hire economists who will figure it out. But it represents an amount of money that they would want after a hurricane of a certain intensity to be able to send these brigades down there, pick up these coral pieces, and stick them back on. And that's complicated because the reef is at a certain depth. So this is not something you can imagine. You need professionals to do this. They have these in Quintana Roo. They have the knowledge how to do it. And so ultimately what this is, it's a contract, an annual contract between a trust fund that was set up, has a legal entity, can enter into an agreement, and a local insurer, which is then reinsured was originally by Swiss Re. And I will tell you, we are not on this risk anymore because there is a market for this. Once you bring a risk like this to market, there will be competition. People will come with different prices. There's competing view of the probability of such an event occurring and so forth. And the contract is still structured today, and it paid out, by the way, in the first year. There was a payout, which is important to kind of demonstrate the value to stakeholders who have never used this instrument before. And maybe a comment also about the parametric nature of this contract. So it was alluded to a number of times. That means that you can imagine you can't wait for a storm to happen, then dive down, assess the damage, as you would if you have a flooded basement, and then kind of determine what the sum insured, what the payout should be. And so the way that this is handled in this case, and I think there's tremendous potential to replicate such an approach with other natural assets, is that you define an intensity of wind speed as observed by a third party, so-called calculation agent. And if that agent observes that wind speed within the defined area, in the case of Quintana Roo, it's a polygon defined contractually by latitude and longitude around a section of this reef, then it pays out. And so to be able to define that wind speed that you'd want this contract to trigger at and then pay out, you need to have some sense of the correlation between wind speed and the anticipated damage to the reef. So there were some studies done to sort of figure out historically what wind speed causes which wave energy, and then that results into assumed damage to the reef. Those correlations are not perfect, right? Every storm, you can imagine how many factors kind of are important here, but nonetheless, that's the parametric approach that we say. So all we need really is the third-party agent to tell us what was the wind speed observed, and then that determines the payout. And so maybe to your last question, what are the limitations? I think we're keenly aware of the limitations, right? You could not take this approach towards other factors that are perhaps even more important to the health of reefs, such as sort of the warming waters, the bleaching phenomena, and so forth, because those are gradual processes. We happen to know that they are occurring. We can anticipate them. It doesn't make sense to pay anybody premium, to kind of, it's like rust on your bicycle. You won't be able to insure it because we know it's going to happen if you leave it outside in the rain, right? So you need to have this sort of, so we're already insuring a subset of the risks to this asset, right? And then we're doing that obviously with, you're not going to insure from the first dollar, so every first wave isn't going to trigger this mechanism. You need a certain intensity, so that means you're retaining risk because storms that don't meet the contractually defined threshold will also have the potential to result in damage. And that's where this idea comes in that UNDP outlined there of a layered risk financing, right? So where you effectively retain some of the risks. Now, the last point I want to make is that what you ultimately need is somebody to feel responsible for this and to consider paying a premium for it. And that's not an obvious thing, because obviously, these reefs, they're located within the constituency, or sort of geographical constituency of some national government, a subnational government, and maybe there's another authority. But it doesn't follow automatically that this authority would be willing, much less have the money, to pay such a risk transfer solutions. And so I think that is really the work that is far beyond anything that the insurance industry can offer. And that has to be figured out by local actors, perhaps in support with global actors like the United Nations Development Program, before you can even bring this to market. And at that point, I think if you've reached that point where somebody's interested in buying this, has some sort of budget or anticipation of a budget, has the location and so forth, then the last step that we can bring is frankly easy.
I focus on the easy part, so thank you for that, Tobias. And it's interesting that you come back to that sort of enabling environment side of things and how critical that is to set the scene, to put the foundations, because without that, essentially, we just can't go forward. So thank you very much for that, and for your comments in general about Quintana Roo and how we can use that as a pilot for elsewhere. So thank you for those words. What I'd like to do is to go to my colleague Tenke next. Tenke, I'm going to slightly change the questions on the hoof, if that's okay, because I'd actually like you to focus on how you can see the kind of work that you're leading on, focusing on debt and bonds, and how you see the sort of investment side complementing the insurance side when it comes to the protection of reef. And is that an easy complement, or what does it take, and what kind of actors need to be in place? And I wonder if you could structure your comments in and around there, please.
You did change the questions. Okay.
But I knew you'd be able to answer it. Well.
I will. I think I'll try to provide a cohesive and comprehensive response to this, because I think it is complicated. And I think the work that Swiss Re and others have done in the sense of assessing the risks and being able to quantify it have really paved the way for what investments could look like. And I know we have some of the investors and donors in the room today, so I think it's a call to action. What Faraz had shared in terms of the four-layered structure is one that I think we can really start to pilot now. So I think it was the second or third layer was the debt layer. We've seen with marine protected areas in particular that they can be successfully financed through working capital solutions, through debt solutions, but this hasn't been directly applied to coral reefs. I think UNDP's leadership in this would be tantamount to bringing these solutions to the fore. So what could that look like? Well, it's putting together some sort of it can be a trust, it can be any kind of simple onshore structure within the country, be it Vietnam or elsewhere, which is capitalized with debt. So that can be donor financing, it can be investment financing, looking for a return or purely looking for impact. Where the payouts can be financing directly reef restoration ex post, but that money is paid back, or ex ante for the resilient solutions that countries or municipalities need to shore up, no pun intended, their reef resources. So I think we can make the interest rate appropriate. It can be concessional if need be. I think there's a lot of donor appetite to do that, as well as impact investor appetite, as we'll hear repeatedly throughout this conference, but it hasn't been piloted. And now we do have the solutions and the risk management solutions to tag along to that would make it possible. So I'm very much a proponent of innovative finance, but also recognize that investors look for simplicity. So I think if it's pitched as a straightforward debt instrument that finances sustainably solutions around natural capital and takes advantage of how that natural capital is priced, then we can do something very interesting. Faraz also touched on the regulatory environment, which is indeed quite fragmented, both at the local and the international level. But fragmented regulatory markets have never impacted the pace of financial innovation. So I think that wouldn't hold us back from indeed piloting any of these solutions. We have very stable, interesting markets like in Indonesia, like in Vietnam, like elsewhere, certainly Mexico, where some of these solutions are already being put to the test. So I think it does require a blended finance solution still at this stage, as much of nature finance does. But I think we have the pieces in place. We have the risk assessment. We have the risk solutions to wrap. So I don't know if we will talk about the solutions in the Seychelles and Belize around debt for nature swaps, but probably what is less mentioned is that in Belize there was an insurance risk wrapper, which was an important component of providing further credit enhancements or de-risking to how this debt for nature swap was executed. So happy to get into more detail or less detail, whatever the investor appetite is, but I'm very optimistic about bringing these solutions to the fore with some of those here today.
Thank you, Tenke. I was actually going to ask you, if you hadn't mentioned the Belize example, I was going to ask you about that, because that's another way in which the insurance industry can actually add value, which is different from what we're talking about. It's not about the parametric side of things and the modeling side, but actually this is adding essentially it's a protection from default on payment, I think. Is that right?
Yes, but we have insurance experts in the room, so I dare not delve too deeply into this subject because I will reveal my lack of robust knowledge. But I do know how the negotiations took place, how in fact one of the insurers that was involved said in fact this opportunity had come 4 years in the making. So I think we have very different understandings of what finally brought the pieces together. But indeed, the risk insurance part was an important part of it, as well as having entities that could provide political risk insurance. So avoiding default or paying for the risk of losing arbitration by the counterparty. So it was not a direct sovereign risk in that sense, but again, a many-layered solution.
Okay, thank you. Maybe we'll hear more of that from Chip and from Tobias later, and perhaps also from Hendra from the country perspective. But now I would like to move on to Chip. So Chip, actually, when you're actually answering a question, it might be interesting for you to tell us about your work also in AXA before you moved over. So because I didn't introduce you of your past, of course, but also just your present role, which is relatively new, I think. But here's the questions also I'd like to ask you, particularly from the perspective of the Ocean Risk and Resilience Action Alliance. So, we talked a lot about, I'd say, I think when we look about the comments we've heard from the ambassadors, myself, Faraz, and from Tobias and Tenke, there's a whole set of actors here. I mean, it's actually huge how many people can and should and probably must get involved in this. So it'd be interesting to see how you see that. So the words here, ocean stewardship, and what that means, I think I'd like to ask you, especially when it comes to financial investments, and where does the responsibility sit in order to, to close the ocean, what we might call the ocean finance gap. It'd be good to hear that from your perspective and Aura. And then maybe perhaps from a more sort of technical perspective, how do you, is there a data and information aspect here which is key and critical? Do we have the right kind of data to make those kind of financial decisions ourselves, whether coming from the industry, development sector, or governments? Or is there something to be said there, we need to have more investment in that space? And of course, just generally to hear from you with regard to Aura and how you see things moving forward.
Quite a lot then. Thank you. Thanks, Jan. Well, it's great to be here. Look, I think that we ought to probably preface the conversation by the fact that 0.01% of climate finance has gone into SDG 14. So it's the least funded SDG of all of them, and yet we all know that the ocean and the oceans provide us with basically the dollar value, the coastal resilience value, I suppose the cultural identity of many nations as well. So, from that point of view, I think we all need to realise that the amount of funding that needs to go into the ocean is too small. So we're talking. Everyone seems to get quite excited by $2 or $3 million or $5 to $10 million driving into the space, and yet we need to be focusing on the 500s to billions of dollars, because certainly for those coastal communities that are going to be impacted most by climate change, they're the ones who are likely to be sitting on the coastlines and either be hit by hurricanes or maybe food security issues and or sea level rise as the years passed by. So Aura was set up in 2019, as you know, you were there, at the UN in the September of 2019. And the idea behind it is really about bringing together different parties, different actors to drive this, to drive finance into nature-based solutions around the ocean. So we have over 60 members now, so from governments through to private sector partners, so AXA and Deutsche Bank and WTW, so Willis Towers Watson. We have yourselves, UNDP, and others within the sort of multilateral banks and areas, as well as the project partners on the ground. Now, the idea, of course, is really to work together to understand more around the risks to coastal communities and those that are basing their lives on the health of the ocean, but also to really drive innovation within the finance system, because ultimately, if we don't do that, we're going to be behind the curve. So when I mean that, what I mean by that is really how we deliver and how we value ecosystems. So one of the ways in which we can develop resilience for coastal communities is by investing in nature. So, we've heard about coral reefs, and I know that Aura, of course, provided some funding through the Government of Canada for the report that you have undertaken. So reefs is one area. We also know that mangroves provide a similar coastal resilience benefit to communities. But of course, both reefs and mangroves provide, the food security. So they are key ecosystems for fish stocks. 25% of all fish live on reefs. And ultimately, what we're also looking at doing is, by valuing those ecosystems, we're therefore able to drive investment into them. Now, the kind of investments we're looking at, as I said before, need to increase and need to grow. I think there's a basic lack of understanding from the investment community around how you can derive a return on that investment, and so that lack of financial ocean literacy is really a focus not only of Aura, but of course of others in the space as well. And we need to drive that, and we need to make that. We need to really pull that. I suppose take that to the fore. Then I'm also aware or conscious of the fact that not only is there that lack of understanding, but there's also a need to focus on the alliance of parties that will allow this to happen. So, look, I think that Aura is a sort of a fairly unique entity in the fact that we are driving all these different parties together. But I think, going back to what Tobias was saying there, I think there's that risk reduction element as well. How do we reduce risk to those investors? Now, yes, we're talking about guarantees. We can talk about blended finance. We can talk about on the public side anyway. But also, how do you drive and how do you use the private sector? So I know that Tenke has also talked a little bit about that political risk insurance. There are other insurances out there that from a credit side, there's already been developed. But also on the other side, well, what do we need to develop? What kind of risk transfer mechanisms do we need to develop over the course of the next year or 2, 3, 5, 10 years? And of course, parametrics is one idea, one thing that is working. And Tobias has talked about the insurance or Mesoamerican reef. Now that. What's fantastic is that that's now being replicated. So there are 7 sites on the Mesoamerican reef that are now insured. And what we need to do, and this is what Aura is doing, is really about driving and replicating and scaling these different ideas. And through the money from whether it be grant funding from governments, through philanthropy, but of course that's all good. But is that sustainable? And that's where we need to really drive in this private sector investment. And that, of course, is what Aura is trying to do.
Thank you, Chip. That's really helpful, I think. I mean, I think the first thing you said is just quite startling. I didn't know that, for example, so when it comes to climate finance, that SDG 14 receives, was it 0.1% of all climate finance? That's quite startling, isn't it?
Somewhat worrying, yes.
Yeah. So when I started talking about, call to action being there needed to be much more investment in this space, I mean, we're starting at a very, very, very low point. So it'd be interesting to see what's happening, I guess, at COP in particular, and see whether or not there's going to be an addressing of this. It does seem to be also rather surprising when you think, for example, how calls to action when it comes to climate finance are being led in many cases by small island developing states. And they're only, because for them it is essentially an existential crisis when it comes to climate change and what the future is for these countries. And
just building on that, maybe, Jan, then I think one of the key pieces around what can investors invest in those SIDS and LDCs, in those coastal communities that are likely to be impacted most, and it's really about driving or identifying the projects that are investable, and over the last couple of years we've really seen the number of projects that are investable now growing, and that's really important.
Okay, noted. Thank you very much for that. So I think now what I'd like to do is just go back and ask each of you one single last question to sort of frame our conversation, and also maybe to, if you like, chart a way forward. So this is the question. I just want to check whether Hendra is still with us. Hendra, are you still here?
Yes. Still here. You?
Okay, good. We can see you on the screen. So, colleagues, friends, this is the question I'd like to ask you all. Hendra, I'd like to start with you. I'm going to go back to the same order, so we'll go Hendra, Tobias, Tenke, and then Chip. So, hearing what we've heard so far in terms of some of the complexities, some of the challenges, but also the opportunities, certainly what is at stake, the significant lack of financing in this space, but as Tobias is saying, actually, technically, this is not an issue. Maybe politically, financially, it certainly is an issue. So a whole range of things that we've talked about. There's an investment side of this as well. There's a range of things the insurance industry can do, perhaps beyond what it's already doing, but technically it can do it. But certainly this issue which has run through it all, which is the enabling environment and the, if you like, the governance, the importance of governance. So that's, I'm going to ask this question in light of all of these framing points, if you like. So this is the question. I'm going to start with you, Hendra, which is, what is your own call to action for decision makers in the private and public sectors in order to, well, I can only say the words change course, or to direct us in a more positive way when it comes to, financial solutions for nature? What do we need to do better, more of, and how do we do that? So, Hendra, can I start with you?
Yes, thank you, Jan. So, yes, I think the first most important is to open open horizon, and also to open for a new kind of risk transfers for that. So I understand that this is can be a great potential, of course, when if we can apply that. So how the lesson learned from the Mexico and can be replicated and expanded, but again. Appropriate risk transfers, financial structures is a kind like diversity risk, and also increase benefit to the reef ecosystem themselves. So that's why we have to to ensure that this for Indonesia as an archipelagic countries, we have to ensure that our coral reef in a good shape, and also we can protect them. And currently, I would like to mention here that our ministry has compiled the Marine Protected Areas Vision 2020-2030, and we are currently also enlarging our conservation areas into 10% of our territorial water. At least will be like 32.5 million hectares. So we need a kind of like a sustainable finance strategy for that. So that's why we need also how to become the operational guideline, especially with Indonesia. We dealing with the national level, provincial level, and also sub-regional level, what we can say that this is like a district level. So the important thing for doing this, we cannot work alone. Of course, we need partner, especially in managing how to apply the kind of like risk transfer to insurance to the coral reef. And I guess, but we have already started with UNDP Indonesia. We have already discussed that, and of course, it needs also interministerial involving for Indonesia. That's why I think UNDP can play a role for this kind of initiative. And we appreciate it. The lesson learned from the Mexico that I learned is really fantastic, and then can be a kind of like for for disaster risk management. And of course, the low-hanging fruits that we can do it for this initiative, I guess we need to to portray the landscape for the insurance, and then I think this is a very important. And then also we have to involve a kind of like the insurance company to try to do this. And of course, for the first 2 or 3 years, we need to government can be part of the risk transfer sharing. So by saying like that, Jen, this is, I think I can respond from your question. Thank you.
Thank you. Thank you very much, Hendra, for those comments. I'm going to pull them all together when I hear from all the other colleagues right at the end. But I'd like to go to Tobias. So here's the question again, Tobias. So really, what do we do? What do we need to do better, and what do we need to do more of? What's our call to action here?
Yeah, $1 million question.
Literally $1 million question, although a $1 billion question perhaps.
Right. I plead for conceptual openness, and what I mean by that is this panel, this event illustrates like the different stakeholders you need to pull off something like this. This is not a product that's going to sell itself. Trust me, I've tried. You have the public sector here, you have multilateral organizations, me as a private sector, and in the cases that we can point to where this has either been implemented or is being considered, you're going to have all of those actors. And so that means, let me describe that from my perspective. I think if you're even thinking about the idea of risk transfer, insuring anything, perhaps a reef, then you need to allow for conceptually at least, you need to go into this project with the openness that, yes, you are going to have to pay premium to somebody, and there will be years, the product will be structured in such a way that there will be years when you don't get a payout. So you invest your premium and you will not get a payout. But think about that. That's what you would want, because the damage in a severe case, right, will be much larger than the insurance payout anyway. So this idea that a payout is, you need to recoup your premium every year, think that through. It doesn't really hold up in practice. Now, there may be instances when that approach does not, you decide against that. But I think the idea, and I say this because I encounter so much sort of resistance to this idea that public funds would be transferred to the private sector, and maybe there is no benefit, perceived no benefit, and so forth. So I'd say give that idea a chance, think it through, make your own conclusions. Don't hesitate to reach out, because ultimately that's what it's going to do. As a matter of fact, I know that Tenke does just that. And on our side, the same, right? We can't go into something like this thinking, oh, we're going to make a quick sell here. Trust me, that's not going to work. These are going to be very long, deliberated decisions, at the end of which the market will be involved. We're not naive about, procurement requirements, sensitivities, price sensitivity, and so forth. But there will be a strong demand, I think, in a competition, at least in the second year, once it's up and running, that you get value for money. But all depends on how you define that.
Thank you very much. Excellent comments there. Tenke, yourself now, could we hear your thoughts on the same question? What do we need to do more of and better?
Sure. I think as donors and investors, there are room in our portfolios for nature-based investments. So it's very simple. I think it's to look at the opportunities on the table and take, I don't want to say take a risk necessarily, take a calculated risk on deploying capital towards one of these investments. So we focused on coral reef insurance today. We talked about piloting a potential loan fund or a debt facility, but I'd be remiss if we didn't mention the Global Fund for Coral Reefs, which some of the partners are in the room and the UNDP is behind, and certainly the marine protected area investments, which our colleague from Indonesia also mentioned. So I think there are perhaps not myriad opportunities yet in the coral reef space, but there are more and more in the nature-based space. So I would say take the opportunity to add it to your portfolio, look at the diversification benefits, look at certainly the positive benefits when it comes to delivering on the SDGs, and of course the potential financial returns.
Thank you, Tenke. And then moving on to you, Chip, last but certainly not least.
Well, I think I'm probably just going to echo Tenke, really, because I think that ultimately we need to drive that investment into the space. We need, investors and insurers and others to do that. We need the engagement into the ocean. And one of the things that we've been working on very briefly, is a sea change impact financing facility. Basically, it's sort of a new financial architecture for the ocean, and it's sort of put into three parts. One is a blue resilience hub, so bringing investors to projects and providing guardrails around those, so the investors know that the projects are safe. There's an umbrella fund, so we're going to look to develop a sort of an impact fund, but potentially a fund of funds in the space too. And then finally, all of this is going to be wrapped up through a risk transfer platform. And for investors and if we can de-risk those investments through this transfer platform, we're working with the IDF, the Insurance Development Forum, to do that. Then ultimately we're then therefore providing that de-risking element for those investors to move into this space. So I think that there's an architecture building out there. I think we just need to engage further, and I think the audience today is probably exactly the right one that we need to be speaking to.
Okay, thank you, Chip. And thank you to everyone. I'm just going to summarize so we can wrap it up here, or I'm going to wrap it up. So first of all, thank you very much to the panelists for their words today, both here in Geneva and also Hendra, calling in from Indonesia. Thank you to Faraz, my colleague, for essentially drafting the report, but also talking about it so eloquently today. And thank you to our ambassadors who gave us some opening comments. It's difficult to frame, to provide a frame on all of this, but I'm just going to pick out a few things. I think I just want to go back to the starting point, how critical reefs are. Let's just be really clear on that. Absolutely critical to lives and livelihoods of essentially a billion of people around the world. Secondly, they are under dire threat. I think we all know that. So, there's a call to action even inbuilt in those two things. Thirdly, Chip, your comment about 0.1% of climate finance goes towards the ocean SDG. So we're missing something here. I think fourthly, this is a political and financial issue, not a technical issue, as Tobias was talking about. Fifthly, the importance of regulations and working across from national to local. We heard that from Hendra, but we almost heard that from everybody about the enabling conditions. And maybe as a final point, which I'm just picking up on, and Tenke, you talked about taking a leap, a calculated risk, which is of course important for investors. And you would imagine insurance investors be able to take a calculated risk because that's what they do, isn't it? Calculating risk. But maybe just as a final point, which I think you were alluding to, Tobias, which was talking about this not being a sort of standard product which you can just go around and sell the way you would any other kind of product. But maybe also what I was thinking of here, it's not actually just the product itself. And I was thinking about, you're talking about, if I invest in my premium year on year, I don't see a return. But that's actually not the only value here. One of the core values here is how you're stripping away uncertainty from the decisions you might otherwise take. So all of those coastal communities, all those countries which are dependent on the coast, and I was thinking actually of your comment, Chip, about how we don't talk about the cultural value and the cultural identity which comes from oceans and coasts. And I'm from Ireland, and actually, if we didn't have the coast, I don't know what we would be as a people. It'd be really odd. And I think about all those nations around the world who are essentially disappearing, and their coastal identity along with it. So, sorry, I just went a slight tangent there, but I just wanted to remember that point. So this issue about actually, it's not just about the premium you pay, but actually it's about stripping away uncertainty and actually working with the industry. We can actually add an additional value, and that actually can be something that we can build upon as we move forward. But certainly at core, I think more investors and more money in this space. And with that, thank you very much. Thank you to the audience here, and thank you to everyone online.